Welcome.
Hey guys.
Whoa,
Welcome to
I can't
Tuesday
do that.
Shakedown. Shakedown?
Shakedown.
I don't know. Auntie Pam had a good one.
Yeah, what was it? Tuesday.
I don't know. Terrific Tuesday.
Terrific Tuesday.
I don't know. Anyways,
Something like that.
We need help. We got to rename this. We got to. We need a better name than Tuesday Training. I think it's too blah. So I had no idea that Corey had set up outside, and so I'm like running around our house looking for him because I was already late.
Not my problem.
I was already late.
She should be able to figure out where we're doing this, shouldn't she?
You'd think, yeah.
Yeah.
Anyways, welcome guys. Good topic tonight, as always, hopefully.
Say hi as you come on, guys. We see you all jumping on. That's awesome.
Yeah.
Just say hi. Let us know where you're from. We know we're getting to know a lot of you now, and we know where you're from, but not everybody does. So just throw it on there, and that'd be awesome for us. So thanks, guys. Thanks for saying hello as you come on.
Hey guys. Nice to see everyone. So talking tonight about kind of a hot topic, and you know, we get a lot of this question.
Win-win Tuesday. I like that.
Ooh, win-win Tuesday. Win-win.
Win-win Tuesday.
Yeah, I like it.
It doesn't have to start with T, right?
No, it doesn't. I thought it would, but no, it doesn't.
Okay. Can you hear us okay? So I'm trying a new device for our microphone today, and just let us know.
Something new, aren't we?
Yeah, let us know in the comments if for some reason we're not clear or something like that, or if we're good. Just let us know. But thanks, guys. So we got New Brunswick, we got Ottawa, we got Edmonton, we got all over the country coming in. We got Tiff's mama on watching with us, and St. Albert, and Ontario, Kitchener.
From inside too.
Yeah, so that's awesome. Okay, you can hear us good, Colleen says, so sounds good. Okay, perfect.
So a lot of people have asked us over the years, many, probably more times than I can even count. They've asked us, why have you guys never done multifamily investing? And it's kind of funny that a lot of people, you know, have wondered that, and you know, people are usually surprised to hear that we never did get into multifamily investing. Now, we've had suited houses, so technically that could be, you know, 2 doors, so you could call that a multifamily. When I'm talking multifamily, I'm generally talking about something that can qualify for commercial financing, which usually means 5 doors or more. Yeah. So when we talk about it, and again, I'm sure not the like proper definition, but when we talk about it, that's kind of what we're talking about. Single family being like one house with 1 or 2, maybe 3 suites. Multifamily, moving into that 5+ doors. Yeah, so let's define that difference to begin with. Okay, so that's our topic tonight, guys. Multifamily versus single family. Like, what should we be out there buying? What should we be looking for? That's a question that, you know, I've been asked multiple times over the years. And so today we're going to talk about some of the reasons as to why we decided to stick with multifamily. Now, before we get into this too deeply, I just wanted to preface all of this by saying, there's nothing wrong with multifamily, and there's a ton of investors that make a ton of money in multifamily. We decided to stick with single family for specific reasons that we're going to talk about tonight, but that doesn't mean that there's anything wrong with multifamily. In fact, you know, in some ways, I kind of wish we had bought some multifamily. But and the reason we're doing this training tonight is because going into the climate that we are starting to go into as investors in this 2020 post-COVID world, you know, where lenders are real tight, the stress test came in a couple years ago, markets are overheated. You know, because of all of those things, we're going to start to see that multifamily has a lot of pluses again. And so that's part of why we're doing this topic tonight, is because it's something that we're all going to probably start looking at again, which is pretty cool, pretty exciting. So what are the differences? We're going to talk about 3 different differences when it comes to multifamily and single family. Now, there's a million differences, but tonight we're going to talk about 3. Now, we're going to talk about the entry in, so the purchase of a multifamily. What's the difference between multi and single? We're going to talk about the management. What's the difference between multi and single? And we're going to talk about the exit strategy. What's the difference between multi and single? And when you think about all, kind of like the pros and cons, which one is better than the other in each of those scenarios. And as we go through that, you know, you might start to think, that makes a little bit of sense. And that fits for me a little bit better. And I like that one a little bit better than that one. And it might kind of help you to decide which direction you might want to go. But first off, let's define the difference between a multi and a single. And then I have a question for everyone.
Okay, sure. And then we got some questions. Okay, perfect. So multifamily, in the context that we're going to talk about it tonight, is we're not talking commercial properties. Okay, we're not talking malls and shopping centers and business centers. What we're talking when we say multifamilies, we're talking multifamily residential, so apartment buildings for the most part, maybe townhouse complexes. We're talking multiple, and that's usually 5 units or higher. Okay, so if you buy a sixplex, that's considered multifamily. And the reason?
And the reason is because that's when you get into a different kind of financing, a different kind of lending and different, money stuff. And that's when the big jump happens. And so that's why we will consider that. So how many of you guys out there are in multifamily or have thought about going into multifamily? So throw that question in there.
So yeah, which one have you invested in or are thinking of investing in? Put it in the comment.
Most of us
multi or single? Multi or single?
Most of us start. It's so funny. Corey did the outline for tonight, and so I'm not used to taking the back seat. I need to just simmer down a bit because you've got this, right?
No, you take it over. By the way, before we get into the topic too deeply, I wanted to share this because maybe we can't see it. Okay. This is our little. This is strawberries that we just picked from our garden today. This is today's crop. And my mother-in-law Dawn, who's I think watching us right now.
Look at that one, that's a big one.
She picked them for us and she brought it out so that we could enjoy them during our lives.
This is probably our third crop from
thank you, Dawn.
Little field of strawberries. It's pretty cool.
Maybe I shouldn't eat them on camera.
Entering multifamily, considering multifamily. Both, but haven't done multi yet.
Okay.
Very interested. So tell me, what is your reservation? Why have you not made that jump? Now, again, for those of you that have just hopped on, we also never made that jump. But, tell me, what is it about jumping from single family to multifamily? Are you the most reserved about, or, maybe scared, fearful, curious, intimidated, overwhelmed, whatever that might be? Yeah, Colleen, you have done a lot of both.
I like all the comments coming in. I think, some, like Colleen says, she's done both. There's definitely a place for having multis in your portfolio. There's definitely a place for having singles in your portfolio. And when we go through the 3 steps we're going to talk about tonight, or the 3 points we're going to talk about tonight, there's definitely advantages to each of them. So,
interesting, Joel.
Yeah. Okay. It's good to get your guys' feedback because, obviously we have our opinion.
Says it seems like there's a whole lot more to understand in multifamily. All right. The complexity of it.
Yeah.
Details, right? Interesting.
So I just wanted to bring up one thing.
Bigger numbers.
Yeah. And we've talked to several investors, thousands of investors across the country, but recently we've talked to several that have been in both realms, singles and multis. And there's a thought out there, and maybe you thought this yourself or felt this yourself. No, there's a thought out there that that you kind of got to start in single family and then progress to multifamily.
It seems to be the way.
And that's kind of the thought out there is that once you get bigger in real estate investment, then you go to multis. But I just wanted to throw this out there that you can do very, very well when it comes to just single family. You can do very, very well when it comes to multifamily. It doesn't necessarily mean if you start in single family, you have to progress to multifamily. That's what some people feel they need to do to get bigger. It doesn't mean you have
to start in single either. You could just go straight in.
Exactly.
However,
but for us, we got started in single family. We did single family investment, and it worked so well for us. We were like, why are we going to recreate the wheel? Why are we going to recreate what's working? Let's stick with what works and let's just keep doing it. And that's why we bought over 100 single family homes. Now, would there have been advantages to doing multi? In some respects, yes. Were there advantages to sticking with single family? Absolutely. So that's what we're going to talk about tonight. So,
and some great answers, like Julia says, in reserve, because you need several sources of borrowing. You need more funding. It seems that way. Kathy, I love that. Not commenting tonight, but we're happy to have you with us. We miss you. So So at the end of and Adele says, that's my jam. I love multifamily. So that's awesome. So what are the pros and the cons? And again, this is just our opinions. However, there are some real pros and some real cons to each of the type of investing. So for those of you that are thinking of getting into multifamily, put your questions in if you have any questions for us of why we did this or didn't do that or whatever it might be. We're open books, so you can always talk, ask your questions.
I love all the comments, by the way. Good job, guys. I love the comments that are coming through. I finally figured out how to get them on our screen, so now we have them there. So love to see that, and all the likes and all of that kind of stuff. So keep going, guys. Keep the comments coming in. Keep the questions coming in as we go through this. So should we get to point number one?
Yeah. So point number one: entry in or purchasing the property. Which is harder?
Okay.
Which is harder? Which do you guys think? What's harder?
What do you think it is? Is it easier to buy a multifamily or is it easier to buy a single family?
You're not allowed to answer, Adele.
Well, are you giving it away by saying that? Okay. So which one do you think is easier? Let's pause. Okay. We're going to pause here for a second.
There's no right or wrong. Well, there kind of is a right or wrong answer a little bit, but it's just interesting to see.
I can make an argument for both sides.
Yeah, so could I.
Okay.
Yeah.
So, well, maybe you make, what side would you argue on?
I could go either. You choose.
No, you choose. I'm going to argue single.
All right. I'll argue. Yeah. Okay.
Okay. We're going to have an argument, guys. We're going to have an argument. Okay. Multi. I see some multis coming through. Multis are easier. Everyone's saying multis are easier. Okay, so
if that's the case, guys, it's so interesting. I love this. Okay, if it's so much easier in multifamily, why are we, most of us, for the most part, why do we all start in single family? Why is that?
Okay, I have some singles coming through.
Yeah,
so,
you got some, yeah.
Yeah.
All right, so let's talk right away.
Why would you say multifamily is easier?
Because if I have bad credit and not a lot of income, that's okay. I don't have to qualify for the mortgage. The building will qualify for the mortgage.
For the most part.
For the most part. So I don't really have to worry about it. So that's my reason for multifamily.
So
what's your reason for single
your
family?
reason for multi is financing.
Yeah.
Financing is easier because the building qualifies.
Yes,
okay?
especially right now.
That's true. That's absolutely true. So my reasoning as to why single family is actually easier is because it's less money down. So now when we were buying, when it came to, we were obviously finding joint venture partners to buy with, and we were putting out cash flow sheets and we were putting out investment opportunities that only required at the time $30, $40, $50, $60, $70, $100,000 down.
Which was a lot of money though. Well,
absolutely.
It was a lot of money then. But
in a lot of cases, multifamily would require an investment of $200, $300, $500,000 down because you're buying $2 million properties. You're buying, $1.5 million or $3 million properties. And so in that case, it requires more money down, and it was harder to find joint venture partners that had several $100,000 to invest versus joint venture partners that had $40, $60, $80, $100,000 to invest. So in that way, I would say single family was easier, but I totally get what you have to say when it comes to financing because multi's financing is easier. So
it's kind of a little bit of a myth though, that's saying that it's harder to get into multifamily. So first off, it's not harder to get in, but you do need more money down. So what you have to get good at is raising funds. So instead of focusing on, getting your financing, and, Sean MP is on here right now, and he can attest to the fact that it's a really tight lenders market right now. There's a lot of, banks and lenders that have tightened up, and we've seen it before. We've seen it happen. We've seen it through the years on and off. But it's about as tight as we've ever seen it in our 18 years of investing. So, we're getting to the point where, it might be easier by far to get into some small multis than to start in single family. I see present for their own cases. I know, Tisha, I see that, but I'm kind of already like, okay, I'm kind of done with that. I didn't prep well enough for tonight to be able to do that. So this is Corey's night. So
well, then that just means I'll beat you in every argument.
Yeah, well, you always do. So what's the difference?
Really?
Anyways, okay. Multifamily management.
Did you hear that, guys? Did you hear that?
You pretty much do. pretty much.
I'm glad this is on video. Like, this is actually being heard by many people.
This was my story of multifamily. I started looking into multifamily. I took a course in it, and during that course, we went with a mentor. We were assigned a mentor each, and we went with that mentor to their buildings, and we went through the, the process of buying a building, and it was really cool in a lot of ways. We went downtown, kind of went shopping around, looking at some properties. The mentor that was buying the property decided that she didn't like any of the ones that she was looking at. The realtor said, well, let me see what else is out there, and started calling owners that she knew in the area. So they weren't listed, but they're business people. Everything's always for sale at the right price, right? So she kind of started calling people, and this, we had two coffee meetings within about an hour and a half, because it was just like, yeah, sure, I'll meet you for a coffee. What do you got to offer me? So that was really cool. It's all about building your team, especially in multifamily, and finding these properties. But second for me was these buildings, tenant-wise. Remember, I have managed our properties pretty much fully for the last 18 years. And I was walking through the properties, picturing, not myself managing, because we certainly would have hired it out, but walking through the properties, picturing the tenant demographic. Now, for all of you guys that know us, you know that we preach about tenant demographic all the time, because that's really what makes your life easy or hard. So when you're looking at apartment buildings, the ones that I was looking at anyways, were certainly a much tougher tenant demographic. So I myself, this is the way I looked at it. At the time, I was looking at buildings that were about $1 million. They were about 12 to 15 doors. They were about $1 million in our market. However, single family houses, so not suited houses, just one house, one door, we're going for about $250,000. So $1 million, $250,000. The same value, it would be 4 houses to make $1 million. Or one building. In the one building, I would have 12 to 15 tenants. And I'm going to say a little bit tougher to manage tenants with more turnover, more vacancy, more work. In my single family homes at the time, $250,000 was buying me a pretty nice home that would attract a pretty nice, even probably executive tenant. And so for me, when the market goes up 10%, it's $1 million in single family, or it's $1 million in multifamily. 10% is 10%. I'm going to get 100 grand up. However, multifamily doesn't rise quite as quickly, generally speaking.
Why?
I don't know. You tell me.
Okay. So here's the biggest difference. Mind you, this is exit strategy. So let's leave that to point number 3.
Okay. Can I finish my story?
Yes, finish your story.
Okay. So for me, I was like, as I'm gaining 10%, here I've had 4 tenants that have pretty much made my life really easy. Or here I've had 12 to 15 tenants that have probably made my life pretty tough. And so for me at the time, I'm looking around, walking through these properties and dealing with these tenants and hearing the screaming and seeing the police signs everywhere. And I'm like, yeah, you know what? I kind of like my executive tenants that put in fences and put in, decks and all that kind of stuff.
Yeah.
So $1 million is $1 million, whether that's in single family or that's in multifamily. $1 million is $1 million. Now, what do you want your life to look like? How do you want... Now, can I renovate a building?
So, yeah, that's a really good point, because here's the thing. A lot of people say, and I get it, no, I'm not disagreeing with them, but a lot of people say, what was I going to say? Okay, let's say I have one multi. I have 14 tenants. I only have one roof. I only have one boiler. I only have one entranceway. I only have one, exterior. So that makes maintenance and repairs a lot easier. Absolutely agree with that. However, you now maybe have 14 tenants for that $1 million property. So now you take single family and you buy 4 $250,000 single families. Now, yes, you have 4 furnaces, you have 4 exteriors, you have 4 roofs, but now you only have 4 tenants. So there's a balance between there that you have to figure out. And there's a balance between the two that you have to think about when you're getting into it, because it's nice to have 14 doors. I get it. You can say you have 14 doors, but remember, guys, at the end of the day, it doesn't matter how many doors you have. It doesn't matter how many properties you have.
The value of real estate.
All that matters is the value of real estate that you own. So if I have $1 million worth of real estate and it goes up 10%, whether that's one building or that's 4 singles, it doesn't matter. They're both going to go up the same percentage. Now, we're going to talk in the exit strategy why sometimes single family can beat out multifamily when it comes to exiting and selling and actually getting that money that it goes up in value with.
Yeah.
But we're going to talk about that a little later.
And Adele, you know what? You're right. It was bad buildings, but at the time I did this course and I had this guru and I had probably the cat's meow, even down to today, of the biggest investors, you know, in Canada, like small time investors, not big corporations, but I mean, they're buying 100-unit buildings. So, you know, anyways, these were my mentors, and we were going from Vancouver to Edmonton to, I think it might have been St. Catharines. So, you know, we looked pretty cross country, and I had that feeling around all of them. Now, granted, the plan was to do what you can't do in single family as well. Buy these places, bring them up to their proposed value, you know, renovate them, kick out tenants, you know, turn them around, get higher income tenants, nicer suites in them, raise the value of the building through raising the incomes and the rents, and then refinance. So it is a bit of a different strategy, but I'll tell you, that seemed like a whole lot of work when I was in that whole program. So I loved it. I don't regret taking it. It was super expensive, but I did love it. And I thought I would go into multifamily, though we didn't. But yes, you're right. It was bad buildings, whereas my executive homes they're beautiful, so they're just way too easy. So far what we've kind of come across is that to get in, contrary to popular belief, we believe that multifamily is easier to get into. Easier, guys, not harder. Especially in today's climate where the lenders
we decided?
Are pretty tough. Did we not?
I don't know. You let the viewers decide who won that discussion.
Well, I don't even think we got it out, but okay.
I'm just bugging you. Okay, so awesome. So we talked about the entry in or the purchase of real estate. It is the differences between multi and singles. Multi, you can qualify easier. Singles, it's less money down.
And who's finding it tough to qualify in single family homes right now? Anyone finding it tough? Anyone finding the lenders have actually tightened beyond like belief lately? Anyone finding that in their single family homes? Yeah, that's right, Greg. He does. Okay,
so let's talk about the management now. Okay. Point number 2. What's the difference between multifamily and single family when it comes to the pros and cons of managing those properties? So obviously you've managed single family for many years now. There's pros and cons to that.
Today, by the way.
Yes.
I didn't tell you this.
Yes.
But I had my first eviction on my hands in a really long time. I would say in a few years. I took a chance on some kids that I knew I probably shouldn't have, but you know what? The numbers made sense to do it. And since we've been doing these, you know, trainings and stuff, it gives me information and topics to go on. So I thought, you know what? I'm going to take a chance on them and see how it goes. So I did a 4-month lease just to see how it goes. I don't like them. I want them out. They don't want to leave. So yeah, today was quite fun.
We'll have fun with that. Okay.
But yeah, generally speaking, single family is a whole lot easier to deal with.
Why?
For me, it's about the tenant demographic. I'm able to choose. I look at a house and I am able to choose exactly who's going to move in there. And I know exactly the type of people that will move in. I then do all my marketing toward it, my staging, my painting, my decorating, everything toward who I want in there. And so I get pretty much the exact profile of what I'm looking for. And they're great tenants that make my life easy. And that's pretty important to me if I want to last in investing for a long time.
Some of the benefits of multifamily is you have, in a lot of cases, you can have a on-site manager actually living in the property. You can have somebody with their inquiring on rent. You know, you have the sign outside the multifamily and it says, you know, vacancy and 1 bedrooms, 2 bedrooms, whatever it might be. And people inquire and somebody's right there. They show them the property, bang, done. the vacancy is filled. And the cost of management in a lot of cases when it comes to multifamily can be significantly less than when it comes to, I've heard in single family 10, 12, 14, and more than that percent of your gross rent can go towards property management if you're hiring a property management company. So, in a lot of cases, multifamily can be a little bit cheaper when it comes to property management. At least that's what I've heard from the clients that I've dealt with. But there's advantages to both. Like you said, there's definite advantages to single family as well. I mean, you can have executive rentals, you can have furnished rentals, you can have vacation rentals, you can have all of those kind of things which maybe attract a higher quality tenant than a lot of apartment buildings or that sort of thing.
Well, and the beauty of getting into multifamily, for those of us that are maybe not necessarily the most disciplined, is that you immediately hire a property manager, generally speaking. And so you're forced to run a business rather than be hands-on. I just talked to an investor yesterday that said, her husband loves doing the work, and she's realizing that they need to step back and out of the business to run the business. But he just loves it so much. And I kind of get caught up in that. So for those of us that do get caught up in that and love the actual hands-on stuff, it's not a bad idea to be in multifamily where you have a live-in manager or you have a property manager that's taking care of all that stuff, and their professional job is to take care of that stuff for you.
Absolutely, Sean. Property manager selection is critical to success, regardless of whether it's multi or single, but especially in multifamily, absolutely, it's critical to your success, is picking the right property manager.
And you know what, Denise, you would be, I think my story, I made it sound like I'm against multifamily, but I'm not, I promise. But absolutely, you can get good tenants into multifamily. It's probably about buying in better areas and buying better properties. Like Adele was saying, it's just the bad properties. You do have to be a little bit, in my opinion, a little bit more careful for sure. Now
the ongoing holding of that property, okay? So property management's a part of that, but there's more involved in that. There's repairs, there's maintenance. So here's the difference between the two. Multifamily, let's say you own a 10-unit building, and let's say you own 5 single families. Now in 5 single families, you have 5 furnaces that can end up going wrong. But those furnaces cost $3,000 a piece. And maybe one of them goes wrong in a 10-year period or breaks down. Now in a multifamily, you might only have one boiler or one heating system, but sometimes the cost of repairs or the replacement of that sort of thing can be significantly higher. So yes, you only have one roof. Yes, you only have one exterior and one set of windows. But if you're going to replace windows in a 10-unit building, it's significantly more expensive than replacing them in a single family home. So less items, but bigger ticket in multifamily. More items in single family, but less ticket, if that makes sense. It's a smaller cost to replace.
If you're raising private funds to get the funds to be buying these properties, whether it's joint venturing or just, finding private lenders, if you're raising those kinds of funds, then does that really matter? Whether it's a higher ticket price for you? No, because you've built in your reserve funds. They've, given you that money up ahead of time. So does it matter? No, not necessarily. But is it there? Absolutely. Is it a consideration? Yeah. Does it make your pool of investors smaller? For sure. But does it mean it can't be done? Not at all. It can absolutely be done. Yeah. Elevators, that kind of thing. Yeah.
Yeah. A lot of bigger ticket items kind of thing, right?
Yeah. Oh yeah, look at that, eh? Okay,
point number 3.
Yeah.
Okay, so we've talked about getting into multifamily versus single family. We've talked about the ongoing costs of holding that property or the management of that property and some of the differences between the two. Now, we're going to talk a little bit about the exit strategy. And to me, this is the important one that you really want to think about when it comes to making a decision. Yeah, as to which one you might want to start purchasing or which one you're going to show to potential partners or that sort of thing. So let's talk about the differences between exit strategy when it comes to multifamily and single family. And I think that sometimes this is the part of the equation that gets forgotten about, because we're all excited to purchase, We're all excited to own and manage, and we think we're going to have this long term. But when it comes time to exit that property, we actually need to plan that way ahead of time. And even before we buy the property, we suggest you think about your exit strategy, whether you're holding it for 5 years or 50 years. And if you plan to sell it somewhere in between there, how are you going to go about doing that? And what kind of returns are you going to get when you do that? Okay, so let's talk about the difference between the two. Okay,
I just have to say too, look at all these conversations. I love it. This is such good practice for everyone. When you kind of hear something that you don't agree with, or you don't understand why or whatever, and you question it, and then you get someone else giving different opinions, it's good stuff. It's good to have different opinions. And there's a lot of really experienced investors here that are having these conversations. So it's awesome. I love it.
Sweet.
All right,
okay.
Single family. So we've had a number of things through the years have come up, and you know what, if we had buildings, big buildings that a lot of you guys know our story about my parents, and we had at one point, they lived in the States, they didn't have health insurance. I needed to be able to get money fast if I needed it. I needed to grow money fast, and I needed to get money fast. So for me, that was another consideration, was multifamily. You can have a building that's going to sit on sale, for sale, for a year or two or more. It's not as quick of a moving market. I needed liquidity almost. So it's not liquid in that I can't get it in a week, but it's a whole lot more liquid than multifamily. So for me, that was a consideration, was if I do need that money, and some big surgery was coming up, or we had to heliport my parents back, medevac them back to Canada, I needed to be able to get access to money right away. And so that was one of the considerations, was being able to sell them one at a time and having a shorter time on market.
One of the biggest differences too between the two is, think about who your buyer is going to be. So let's say I buy that 10 unit. We've been talking about this whole time. I buy a 10 unit, or I buy 5 single families. Now, when I go to sell that property, this is, let's say, 10 years down the road, I go to sell that property. Who am I selling the multifamily to? Am I going to market it to homeowners? No. Am I going to market it to first-time buyers? No. I'm only marketing it to investors, okay? I'm only marketing it to other investors that might want to buy. Now, those investors that might want to buy are going to be running the numbers. So they are going to be looking at it saying, it has to cash flow, I have to be able to get financing, all of those sorts of things come into play when you're selling it. Now, if I have 5 single family, who can I market that to? Well, the gamut opens up. I can market it to homeowners, I can market it to first-time home buyers, I can market it to investors, I can market it to whoever I want to. I can stage it, I can make it look really pretty, I can bake bread in the oven when people walk through. I can do all that sorts of things that really just marketing to an investor doesn't really matter. There's number-based, 100%.
Okay, so the flip side of that is that if I want to sell my apartment building to a first-time home buyer, well, I gotta, make that bread, and I gotta make it look pretty, and I gotta stage it, and I gotta do all this stuff. If I'm selling to another investor, all I gotta do is make sure that those rents are where they need to be, high enough that it makes sense for the price that I'm asking. So it's a lot easier, a lot faster of an equation, and I certainly don't have to rely on emotion. So the flip side is that, if I've gotten in fairly easy, bought into the market, I've done my job of raising rents however I can, whether that's, adding laundry to suites, or renovating, or, whatever it might be to get those rents up higher. If I've done my job right and my numbers look good, then I'm going to have, a pool of investors that are going to be interested in it. And so, I won't have to rely on emotion. I can just, this is our vacancy, and this is our numbers, and this is how much we make, and done deal. So it's good because you don't need to appeal to homeowners, but it's bad because you don't need to appeal to homeowners. So hopefully what you guys are getting from this training is that, there's no right or wrong answer.
No.
And we never ventured into it, but we've been very close to those that have. We've seen their journey, we've seen our journey. We have a good idea of it. But going forward, coming up, the reason I really wanted to do this training is because coming up and going forward in this, climate that we're getting into, I think a lot more of us are going to start looking at multifamily and have to start looking at multifamily. And it's probably going to look pretty darn good in a lot of ways. So just wanting to start the conversation and get your brains rolling a little bit for good and for bad.
That's the whole purpose of this. The whole purpose of this is to get those juices flowing, get the conversation going, start you thinking about what are the pros and what are the cons of each of these. And you know what? Some people are just built for multifamily. Adele is a perfect example of that. Some people are just built for single family. We're a perfect example of that. So there's different investors out there, and there's different things that you're going to prefer. I mean, for me, when it comes to exit strategy, I by far prefer selling to homeowners. When I have an investment property that I've owned for 15 years, now I can renovate it to a primo condition. I can now sell it to homeowners. I'm marketing to emotion. I'm not marketing to numbers. And that's what I love about it. And I love also being able to just sell one here, sell one there, sell one there whenever I want to, instead of selling a building of 50 doors. So to me, there's advantages to the single family, but that doesn't mean there's anything wrong with multifamily. And it doesn't mean when you buy single family, you now have to progress to buy multifamily or vice versa. It depends on what fits you the best.
So let's take another consideration on our exit is capital gains. So when we are exiting a property, again, let's go back to that example of having four single family homes that are worth $250,000 a piece each, versus, $1 million building, and both have gone up, 10% a year, or not 10% a year, but let's say 10% over the life of it. And, then we go to sell. Well, I have now, I've got to sell my property, my multifamily. I'm going to make all my gains, unless I do a vendor take back. Of course, there's ways to kind of change things up, but I've got to sell all my multifamily and pay tax on it in that 1 year. Whereas with single family homes, what we did with one of our investors was we staggered those. So we sold one a year for a few years, and it was able to defer both of our taxes a little bit, so that we didn't have to pay such huge chunks in one year. So that's another benefit to single family. However, again, you get a lot of upside by renovating and bringing properties in multifamily up to their best use. You get a lot of upside in that you can't necessarily get as well or as much in single family. So again, pro and con. Hopefully
so here's a sweet spot, guys. This is what I wanted to get to, okay? I wanted to get to what's the sweet spot in between both of these.
Nice.
Okay, so let's think about this a little bit. We talked about the advantages of multis, easier financing, everything located in one spot, possibly easier to manage. There's lots of advantages to that. We talked about the advantage of single family. You can sell them when you want, maybe easier, less money down to get in. We've talked about the management. Maybe the single families are a higher type of executive type tenant, and you can sell them off one by one when you exit. So we've talked about the advantages of both of those. Now, what's the sweet spot where we can combine both of those strategies? So this is where I want your juices to start flowing. I want you to start brainstorming. I want you to start thinking of opportunities around you where maybe there's a complex where you can buy 6 single family. Maybe there's a street where you can buy 8 single family or 5 single family.
But we have to explain this.
Okay.
Because traditionally, if you, like someone like Michael Ponte, you're going to be like, what? No way. This is true. This is happening right now repeatedly. So we can tell you for sure it's true. Traditionally, if you had to have them all under one roof, like 5 doors under one roof to qualify for commercial financing. However, there are properties and products that are becoming available now that have closed and done deal, like we can vouch for this, that you know, let's say it's a single family, a suited house, so an up-down duplex, depending on what part of the country you're from, and then a garage suite. So three units, 3 doors on one property, not under the same roof, but one property. And then not even next door. Doesn't even have to be next door. You can be 1 or 2 or 3 or 4 lots away or whatever it is. Same neighborhood though, generally. There's another house that's got 2 suites in the house, so 1 up, 1 down, and then a garage suite. You now have 6 units. So by buying 2 of these houses together, they're qualifying for commercial financing. It actually is. So the Alberta on Fire team is doing that here in Edmonton right now. We maybe have another lead on it, on someone doing that in BC as well. So, you know, this are
is a trend that is going to continue to grow. And the reason for that, and the reason we want to give you guys the heads up, you're the first ones to really get to know this strategy. I haven't heard it talked about anywhere. So is combine the benefits of both of these strategies, guys. Okay, so start looking for properties or opportunities where there's 5+ units in the same general area that you can buy at the same time from the same seller or from the same builder. They all go together. It can be considered commercial financing, multifamily financing, and you get the benefits of multi. They're all located in the same area for your property manager. The financing is going to be easier. All of that good stuff. And you get the benefits of single if and when sometime down the road you want to sell them off individually, you have that as an opportunity. They are individually titled. So I want you guys to start brainstorming, start thinking, start the conversation. We want to make this aware to you that these opportunities exist out there where you can combine both multi and single.
Yeah, and Marie, you have a good point. Yeah, with commercial financing, we have to jump through more hoops. As investors, do we jump through hoops? We totally jump through hoops, and then they change the darn hoops, and we got to start jumping in a different way. So that's what we do as investors. But you're right, there are more hoops to jump through with commercial financing. But you know what? That's okay if it's going to get us closer to our goals. And right now, you know, again, you know, guys like Michael who've been around for a really long time, he can attest to the fact that lenders, you know, have come and gone, and they've tightened and they've loosened, and you know, as soon as you comply with one lender and you think that you're there and you do everything you need to do to make sure that you're going to be able to buy, you know, 8 properties with this lender or whatever, you get all your ducks in a row, and then by the time you get to the 8th property, they've changed the rules. So you know, it's really so liquid, and that's what we're finding right now, is that we've been talking to people over the last couple of weeks, a lot of the professionals in the world of finance, and they're just saying, you know, it's real tight right now. Things that were available last year are not available right now. And so what are we doing? We're going to switch gears. We're going to start looking at what is available to us. Yeah. If that means that we go into small multis,
changing.
And you know what? This is the other thing. Yes, always need to adopt, right, Michael? Like, you've been all over the place. But what we have to do is we also have to look at, you know, we're going to adapt our financing and that sort of thing. We might also have to adapt our market. We might have to look at a different market, and holy smokes, what? Get out of my comfort zone and, you know, invest somewhere that I don't live, and, you know, how am I going to do all that? But guess what? It's one more step that forces you to think like an investor, forces you to run it like a business, because you can't show up with your hammer. You can't, you know, do those things that you normally would maybe want to. So all of these things combined, we're wanting to open your brains just a little bit to that conversation of how can you, I love how you say that, sweet spot. How can you, you know, meld all of those worlds, and really start thinking about maybe, you know, not being afraid to take that jump. You know, as always, we're doing our first rent to own right now, because I really do believe that if we're gonna teach something or preach something, we darn well need to know how to do it. That's why we did our first flip ever. That's why we did our first basement suite renovation, you know, back when, because we were helping others do that in their portfolios. And so, you know, same thing with this, with a small multi, maybe we need to get into one and do one and kind of, you know, pave the way. But certainly, is this a good time to be getting into multifamily if you aren't already? There's certainly a lot of things pointing toward that being a good way for us as investors to be going right now, probably for the next couple of years, I would venture to guess.
So Andrew, you asked the question, will lenders do commercial mortgage on 5+ based on rental income and or personal income. So they're definitely going to lean towards the rental income. That's what they're going to be looking for. That's what multifamily financing is focused towards. If those 5+ units are located close to each other, and you're closing on all of them at the same time, and they all fit the same parameters, there's definitely financing out there that's available for that. Is it easy to find? Absolutely not. Is it findable? Absolutely. So it takes a little bit of work, guys, and none of this is easy. I mean, we're in a flippin' pandemic in this world right now. Things are going to be more difficult than they've been 1 year from now, or 1 year in the past, or 2 years ago.
Well, but even remember, in the last 3 years, we've seen tightening, then tightening more, then tightening more, then tightening more, and now
these things are not easy, absolutely. But is it possible? Absolutely. And it takes a little bit of digging. It takes networking. It getting to know other investors out there that are doing this stuff.
Sean, we're not giving out the good secrets, but don't miss laser tonight, because we have a couple little tidbits there. We're doing some training there tonight too. So
okay, so awesome questions, awesome interaction, guys. I love all the questions and all the comments and all the talking that's going on. Obviously, this is a topic that a lot of you are interested in.
So hopefully we've opened your brains. That's the intent of today. It's not to make one better than the other. And I love how some of you guys, are bantering back and forth about, no, I think this and I think that. That's great. This conversation needs to be started. We need to start, Sean has some contacts, and we have actually a few other people we're just talking to. We haven't delved right into this, but we are definitely seeing a trend, and so we hope that we've opened your eyes to that trend, opened your mind, and seen that there are a lot of pros and cons to it, and it's not as scary as it seems. It doesn't need to be. So and it's a path that I think a lot of us are going to end up walking down. So hopefully we've done that for you guys. Thanks for joining us tonight.
Stephen, I just wanted to say, the time range, a day. They have to close on the same day. It has to be the same closing date in most cases. So
hey, that's
I just
cool
thought
question.
I'd answer that one. Sam says, if I have 4 existing in the same area and buying another, then no, probably not, Sam. You'd have to be closing on them all at the same time. From my understanding, however, talking to a mortgage broker, they'd be able to help you out with that a little bit better.
And you know what, we are delving into this a whole lot more, and we're gonna get the details down pat a little bit more. It is something we haven't had to do as investors for quite a while, and we're finding ourselves in a lot of spaces lately that we haven't had to do as investors for the last few years. Like since 2008, I think was the last real tightening. Even 2014 wasn't that big, but anyways, we're working on it. We'll be keeping on working on it, and bringing it to you guys when we get the goods. So thanks for joining us tonight. We'll see all you Igniteds over in laser session for tonight. Yep. We're doing a presentation tonight on private lenders. So hopefully we can get some details all cleaned up. Pictures of the vet. Yeah, we really should.
Yeah,
he does have it, Todd. It's not a stupid car anymore. It's just a ridiculous car. That's why I've noticed I stopped calling it stupid, and I've started calling it ridiculous.
Yeah.
Because it is ridiculous. However,
absolutely not.
Anyways, he's loving it.
Fun.
He is loving it. But we still do have this thing where we are going to pay for it. Rich Dad Poor Dad, how he says you always buy an asset to pay for your liabilities. Well, I'm sorry, this is a liability to me. And so, what do? You buy an asset to cover that. And so that's pretty much the only way I'm going to be okay with it. So that's what we're going to do. We're going to do a little project. We're going to find a way to cover it and find a way to pay for that Corvette. So as we do that, we're going to share our journey with you guys and show you how we put our money to work
Next
better
live
and
from the
smarter.
vet, Tisha says. That's awesome.
Oh my goodness. Yes, it is true.
Everyone needs a bit of ridiculous. That's
it's
right.
Very true.
Yeah. Thanks, Todd. Thanks.
All right, guys. So we'll see you next week.
Okay, guys. Thanks
what?
for joining
What's
us again. Next week
I don't remember even. Shoot, I meant to write it down.
Oh, what are we talking about? Nin, throw in the comments.
It's going to be like 20 seconds.
If you're there, what next week's topic is. It's really exciting, guys. It's so exciting. We can't even remember what it is. But we did plan out our whole September earlier today. So next week is going to be, is it?
Buy a multi to pay for it, Andrea says. That's good.
No. It's private lending. We're going to talk about private lending next week, aren't we?
I don't know.
Anyway.
I don't think so.
We will,
Anyways, guys,
you'll see it in the feed. Okay, thanks, guys. Have a great night.
Yeah, everyone have a great night.